Thursday edition. It's nice to have you with us. And wow, it's been a heck of a week for me. Not much chart time, I've got to say. But, oh, hang on a sec. I've got stuff going on here that I don't want to have going on. Sorry, guys, I've just got in front of the charts and everything's going nuts. Let's get rid of that. That's the one we want to get rid of. Okay. Happy days. Not sure if I'm screen sharing, but if I was, you saw exactly what was going on my second screen. All right, I think that's better. And now I can relax a little bit. Sorry, I've just got in front of the computer because I've had a very, very busy day. And of course, we need to get started. So let's get into it and start with gold. Gold, of course, being the medium that we're trying to get a London Open session breakout perfected. Hasn't been too bad, depending on how you manage your trade, I suppose. And I'll get into that a little bit later, but you've got to be prepared to take profit at support or resistance. There's no two ways about that I found anyway. And that's no surprise, given that sometimes the market breaks out one direction, comes back and turns the other. So we've got to be prepared to take profit at our support and resistance levels. What they are, of course, is differing on a day-to-day basis. So primarily, and I think this is the way to go for me, is to use the pivots at the moment. And that seems to be working okay, like your DS1s and your DR1s, or the weekly pivot or the monthly pivot if it's untested, et cetera, et cetera. So if you're prepared to do that, which gives you poor reward to risk on the first part of the trade, and the way I'm now going to approach this is take first profit at first resistance, or as Ash would call it, first contact. And that may be, as I said, a pivot, maybe a trend line, horizontal level, whatever you use as your support and resistance areas. And at that point, I don't think I'll take too much off, maybe half, and move my stop to entry. That way we're getting a result if we hit TP1. And if it does go into a big move like yesterday, but only after it went in the wrong direction, of course, then you can pick up something substantial. So that's the way I'm approaching it at the moment. All right, today, here's what we've got. The range begins with the open of Hong Kong, and that is that bar there, second 1 hour bar of the day. So that'll be the high of the range, which is not quite the high of the day, but very, very close to it. And we use the current bar. If it is the lowest point of the day, which currently it is, that will be the low. So that's the range that we're looking to break out of. I'll give you numbers on that because I will trade it. The number for the low is 1830.16. So we'll round that down to 1829. So that'll be the low and the entry for the short. And the high will be the high of that bar, 1838.21. We'll round it up to 1839. So I've got 1830 and 1839. Right, so we can set that up as a trade. Now, those of you who are not aware of how this works, we place two orders, a buy and a sell. We'll place the sell first because I'm there. I might as well place the long. No, I can change it, right? Sell stop because we're closest to that. So we put a sell stop at 1830, and we use the high of the range as our stop loss. So in this case, it was 1839. And take profit for the short will be DS1. I don't think there's another level. Well, I certainly can't see one at the moment. Let me move that for a tick. Maybe there. That looks reasonable to me. It's been resistance there It's been support here. So, okay, let's use that one. 1827 we'll go with as our take profit on the short. Now, I'll just use that as a take profit level for now. In other words, we'll get out at that point. That's not how I will play it. However, I will take, as I said, the first take profit there will be half off, and I'll move my stop to entry. But for now, in case I miss it, I'll just use that as a target. Now, the buy is the opposite of that, of course. Buy stop at 1839. And stop loss will be 1830. Take profit on the long, I can't go through that high. So I'll use, there's a level across here. You see that weekly pivot of a few weeks ago. We're going to go with 1843. That's not a big profit, but like I said, first profit there, stop to entry, take half off. That's my methodology at present. Right, so they're sets. And if you are, sorry guys, in the waiting room, I know you can't hear me, but I was a little bit distracted with doing something, of course. Okay, so that's the gold scenario. I'll just repeat that for those joining now because I've left them in the waiting room. My apologies for that. Unfortunately, I've only got two hands and half a brain, so yeah, you have to put up with that. All right, guys, the gold breakout trade is today entering short at 1830, and first take profit is at 1827. Did I say? I think so. Whatever that is, 1827. And the entry for the long is 1839, first take profit at 1843. Now, the first take profit, for those of you who are interested, is a 50% off and stops to entry. So if it does give us a big move like that occurred yesterday, we can take advantage of it. That's the way we're doing it at the moment, or I'm doing it at the moment. If you want to follow that, happy days. If you don't, then I completely understand. This is a test, right? It's not a proven system of trading. So please exercise caution with that. Right, I want to update you from Monday with myself, and very, very briefly, the gold trade that we're in short since that bar there and trailed our stop down to here has been taken out, as you can see. Gold bouncing off that 1806 level. Dolph Lewis is in the room. He nominated that on Monday. No, I can't see him in the room at the moment. As a buy, and he nailed it. He got it absolutely spot on. And I was hoping, obviously, that we get a retracement that wasn't strong enough to take us back to here and give us a second or a fourth phase, actually, as it turned out. That hasn't happened. But I've got to say, if I get a reversal bar on a daily or a weekly chart, I'll still be looking to sell gold. So out of that trade, what else were we in? I can't quite remember the trades that were in other than that. Euro Swissy. Okay, Euro Swissy. Is that this week or last week? I can't remember. Too hard. We got out of the Euro Swissy. Euro Swissy short was a losing trade. However, halfway through, I haven't got Euro Swissy here anymore. Halfway through Euro Swissy, I did see an alternate long scenario, and I took that. Sadly for me, I got out of it as well. And since then, Euro Swissy has just gone to the races. So I think it was on the 4-hour chart that I noticed. Yeah, we had this turn up here on Tuesday. There's a break and retest. That was the daily chart, I think. I switched positions. That was the 4-hour. I switched positions here, I believe. I didn't switch positions. I left my stop loss in place for the short which was triggered, but I also got into a long, and I got out of the, no, it was this one. Sorry, my apologies. Monday, Tuesday, Wednesday, no. Is it Friday? It must have been last week. Sorry, guys, I'm all over the place here because I've just got in front of the charts. I don't remember exactly what day it is, much less anything else. It was there I got into the long, and I got out pretty much here at that level. So I evened the trade out at the end of the day with a hedge. And my apologies for those of you who didn't manage to get that notification. Since then, I've done a few things. One, Aussie CAD was another, right? We were short Aussie CAD, and I trailed my stops down to break even after having taken first profit. So small winner there, price came back, as you would expect off a bar like that. I was hoping it would only come to here. It didn't, went beyond. Perhaps now I'd like to reassess that stop loss and put it up here somewhere, but too late for that. And this could well go down. I've been forever and a day hunting CAD Swiss, and for 4 weeks now, I think. And I think we put an order in here for the first time to catch this breakout. And of course, that didn't happen. And we then placed another order, I think down here somewhere, but I can't remember exactly where, which didn't trigger. And we also traded this bar last week, which didn't trigger. And now we have another setup. And those of you who are slingshot aficionados or know exactly what I'm talking about will recognize the slingshot pattern that I'm trading here. You can look at it in many ways. And as always, I hate to trade at these levels. This is a pure and simple breakout trade. And they're either going to work or they're not, as we all know. But I've got my entry above this candle here, and that has been triggered. Got my stop loss below here because I've got a nice little slingshot candle pattern there that I do like to trade, coming out of consolidation in particular. As always, much prefer to trade this from down here. Is this a FOMO thing? Maybe it is, but I'm only trading it at a small risk of 0.25%. So at the end of the day, if it fails, then so be it. Now, those of you who know me will know I hate to trade dollar yen. Yet I did, again, trade dollar yen as a breakout of this range here and a retest. I thought I'd catch this little candle here, put my entry here, stop loss just under the weekly pivot, and guess what happened? Came underneath the weekly pivot by too far and took me out. And now it looks as though it does want to go on with the job. We'll see how that pans out. I do have another order on Swissy yen short, primarily, and this relies on trusting the yen again. And as we saw early in the week, the yen on just about every pair outperformed just about every other currency. And you can see that bar sitting there on Tuesday. We got a retest of the weekly pivot there. In fact, we came back and closed above it. That to me is it's like throwing a bait in for a fish when I see that, and I'm the fish. And I've taken a small chunk once again, just a 0.25% trade as a break and retest of the weekly pivot. Everything's going up here, of course. We are in an uptrend, but this candle here is somewhat standoutish, I'll put it that way. And the retest that failed to take out more than 50% of that candle gives me the impression that we're going to come and retest an area of support. So we're trading underneath that bar. And that's yesterday's daily candle. And we're putting our stop loss above. Obvious level to take profit is at the monthly pivot, which at day 2 is untested, as you might expect. So I'm not putting too much value on that at this point, but it is also a former resistance level and now former support level. So if price honours that support, I'll put it that way, then this is simply going up here and we shouldn't be taken into the trade. If that's not the case, and this reversal bar means anything, then we're going to hear, in my humble opinion. So that's where I'll take some profit. I'll probably get most of it off the bank, I'll put most of it in the bank, maybe 75%, because I'm not sure that this can actually go down here, and I don't trust the yen in terms of strength, and that's why I'm pretty keen to get out of here pretty quickly. I think that's about it. Got CAD Swiss in the markets. Swiss yen is another order. I had options today. I was thinking about taking CAD yen instead of CAD Swissy. Didn't do that. I considered taking dollar yen again, based on this reversal bar here. So nice bounce off the weekly pivot. Didn't do that. I may live to regret that, but the dollar yen it's honestly, every time I trade it, it just does the opposite of what I think is going to happen in the short term, and then it plays out in the long term. SH1T currency pair, in my humble opinion, and I find it very difficult to trade, as I've said on many occasions. So I think I'll leave it there for now and say good day to Ash. How you doing, mate?
Yeah. Oh, sorry, mate. Yeah, not too bad at all.
You've got a raspy throat. Did you have a big night or what?
No, so it's cold here, but I'm sort of out in a t-shirt, and I'm I'm convinced that it's helping my white blood cells, but maybe I'm wrong and it's giving me more of a problem than that. I don't know.
It's springtime. It should be beautiful.
It's cold, mate. I mean, I can see the frost on the rooftops. It's I don't know how cold it is actually today, but it has
beautiful spring.
But I quite like, yeah, exactly. I quite like going out. When I go out, I like to just wear a t-shirt because it doesn't. It's cold, but it's really fresh. You know, as long as it's not a high wind, I haven't got a problem with it. I don't like my hands being cold, so I will wear fingerless gloves. But otherwise, I quite like a little bit of chill. You know, but it is 3 degrees today. 3 degrees here, so it's a bit chilly.
Oh, that was a band, right?
The 3 degrees, was it? Yes, it was, with Dinah Ross.
When will I see you again?
No,
I didn't do. Oh no, I didn't do that. I didn't do that, did I?
Oh, I'm hoping that I was.
Sorry,
was
Paul.
over it. So anyway, markets, mate. Markets, fascinating stuff. I've been in trades, I've been out of trades. There's been some good ones, there's been some not so good ones. So let's talk about the market generally, because I'm sure nobody's really interested in what I had done. But we will just open up a different chart there. Here we go. So we have got big news today, as we all probably know. We got ECB inflation data, CPI data. And if you looked at what happened in Germany yesterday, you would have seen that the CPI data from Germany was pretty worrying for the market. And I managed to get into this DAX. Actually, I took profit way before way before where we are now. But it was a decent trade. So in fact, let me bring this up with pivots if I can. Here we go. I was in up here actually, and I managed to get this first move, but it's gone even further today. As that the CPI data from the EU, from the Eurozone generally is to be reported, and it stopped right the way along this trend line here. So if it breaks down here, then there's a chance that we come back to lows, and then there's another chance if it pops back into this area here, then there might be some further downside, but not looking good. Interestingly, when the market actually opened yesterday, and you know, I've been waiting for this DAX for quite some time, because GDP from there's lots of things from Germany. GDP from Germany has been weak, so I've been waiting on the DAX to try and get some downside. And as the market opened yesterday, we got a surge to the upside, breaking through this area, and that was because China reported some pretty stellar PMIs. So it looked like, you know, the European market is highly affected by what happens in China. So it was all looking quite positive initially, but then the CPI data came out of Germany, and we just got this move to the downside. Now we've got this move to the downside in anticipation that that is going to filter through to the to the Eurozone news, and if that does, that suggests higher and higher interest rates and a more hawkish ECB, which seems to be really what the ECB is saying anyway, and subsequently. That would suggest that that we would get further moves to the downside in stocks. Now, if you look across the pond, same thing in the United States. United States, we see the Nasdaq pushing to the downside. Lots of speculation that the Fed are going to be, raising interest rates even further, and this is also starting to move to the downside, right into this trend line here, which we have here. So this kind of breakout point is potentially, an area that this might get to. Let me just double check. There's one not further than that. There might be. It looks like it's there actually. So it looks like we're looking along this this breakout of the trend line here. Now, this would be interesting because it would create an inverted head and shoulders. You can see this would be the head here, and this is on a weekly chart, a weekly time frame, which is of course much more powerful than the dailies and the 4 hourlies and everything else. So you got that kind of going on, and it does suggest that this area here may well be a point where there might be some reflection. Interested to see how this compares with the sentiment cycle, but I think this may well be the aversion point as we come down, and it does suggest that if this does hold, there is higher to go. We still haven't hit these pre-COVID lows there. That's the area that I think would be really, really interesting for traders. And now I'm not investors. Now I'm not suggesting that it doesn't pick up some buyers here, because there's every chance it could. But I think that there's probably still enough negativity, and if the Fed continues to hold pat, there's probably enough negativity to suggest that this might well get seen. And if it does, I think there's going to be a bit of a frenzy, depending on when it happens. If this can happen first half of this year, I think that there will be quite a lot of confidence that the second half of this year could see some upside. But if you consider why you would be selling the Nasdaq, the 10-year yield alone, we got 2-year yields, we've got 3-month yields, and a 10-year yield is the kind of benchmark thing. So just to give everybody a little bit of an understanding about what happens with valuing stocks. One thing that they do, that they've got this discounted cash flow method, and the discounted cash flow method really involves them discounting, part of the equation. They have to take away the risk-free rate that they're getting. Now, the risk-free rate currently is around about 4%, because it's based on the 10-year yield. So if you were to buy government treasuries, if you were to buy the 10-year treasury, you would get a yield of 4%. Now, many stocks aren't giving you a yield of 4%, so that decreases their valuation. You've got to be able to assume that the growth is going to go beyond at least that 4% yield. Now, in the Nasdaq, very few companies even pay a yield, and these are growth stocks. So the idea about buying Nasdaq stocks would be that you buy it today because it's growing, and then eventually, sometime in the future, when they become a mature company, they start paying a yield, and the yield will be very, very high in comparison to which price you got in at down near the lows. But with a yield so high, that is putting a lot of pressure on the assumption that you're going to get a decent deal here. So this has got a decent chance of pushing the Nasdaq lower, maybe to this area, but maybe right the way down here. And if it does, I think there's going to be a buying frenzy. I'll probably be on board with that myself. So this is really the time that many investors will just be accumulating cash. They get 4% back on their cash minimum, depending on where they put it. But let's say that they just go and get the government treasury bond. They get a 4% kickback on their investment for a particular period. And then when the price comes down here, they get out of those positions, and then they start buying up the stocks with the cash and the extra yield that they've managed to earn. So the timing may not be right if it comes down to this point. You know, it may well drop another 20% or 15% before we start to see some genuine upside. It's, you know, it's a bit of a long process, but we're talking about so far we're you know nearly a year. Yeah, sorry, we're over a year into the move to the downside so far. And recessions do sort of tend to happen, to take a 1 to 2 years to happen. So we could be into this in another year. We might sort of like not see this until early next year, mate. But if it comes down here the first half of this year, then I think that there's going to be a lot of pressure on the Fed and the other central banks to start loosening policy again. And yesterday we had
pivoting, the pivot word.
Yeah, well, yeah, the potential pivot, and it's, you know, this is where we're still seeing a bit of disparity between central banks, because the ECB are talking about raising interest rates, and the ECB might well be in a situation in the next 2 hours where they're going to be put under further pressure, because we've got the CPI data, going to be released. They're looking at 5.3% year on year. That's the core. Year on year on the CPI, they're looking at 8.2%. We have seen in the ISM yesterday, and some other metrics, the inflation in the United States or disinflation has slowed. So we're not in a situation anymore where what the Fed has been doing is been enough. You know, they're going to have to go again in accordance to that. But of course, they are starting to choke the economy. ISM PMIs were pretty weak yesterday, so they're starting to choke the economy. They're doing the same in the eurozone, and it's getting quite damaging. We've heard from Governor Bailey from the United Kingdom saying that rates won't stay high for too much longer. And subsequently, what we've then seen is a big turnaround in the pound. You know, this is what we've got. So, you know, so this was yesterday's trading. Look at that, bang! As soon as he came, this was at 12 o'clock. So this was when Bailey started speaking. And because of his comments, he's basically sort of saying, you know, we're getting a bit more dovish. That's what's happened to the euro pound. And it suggests that if we get a high CPI print today from the euro, this could go a lot further. You know, we're looking at, I mean, this would be, is this a, no, it's the weekly pivot's low. So this isn't a wave rider bar, but this would be an area that I think there would be a lot more, you know, some more interest to the upside. And it would mean breaking through the trend line. So it's holding currently because they're waiting for the data, but that data comes out strong. The euro pound is going to push to the upside. The data comes out weak, I wouldn't be interested in the euro pound because of the sentiment from Bailey. Now, you were talking about the Swiss yen earlier, and the Swiss yen was something that I traded a couple of days ago and got a little bit of profit out of it, but it wasn't you know, if I hadn't taken the profit, I'd have been stopped out by now. So I'm glad I did. But you know, this is the balance. You know, I've probably given up a couple of percent on the DAX by closing the position a bit early, but then I've managed to kind of like not only not lose on this one, but I've also taken some money on this one by closing early, because what we had was a move to this trend line down here. And I think I was getting in here. Now, the reason I did get in was because we had data from Switzerland that was weaker than expected. Now, I can't remember exactly what the data was now. It was I
can't help you. I haven't been in front of the chart.
Oh, it was
Monday,
GDP.
so.
It was GDP. GDP sort of coming in at quarter-on-quarter 0. So that is obviously, you know, it's just a 0.1% away from the start of potential recession. The previous quarter was slightly positive, but we are seeing negative quarters over negative quarters. So CPI from Switzerland is weak, and we also do have a reversal pattern on this. Now, it's interesting to me that you said that you were looking to get into this, because I sort of stopped considering it as a potential entry, but I think I'm going to try and take it on again. Because of what you know, I totally agree with what you're saying. There is a head and shoulders pattern here. We haven't really had anything from Japan per se, but we do have you know, that changes things. on how we should be looking at Japan. But overnight, retail sales from Japan, actually there were resale sales from Switzerland as well, which I forgot about, and they were weaker than expected. I think that was correct. So on Monday, retail sales from Japan 6.3% from 3.8%. So a core CPI is 3.1%, in line with expectations. So nothing sort of like too concerning there, but definitely pushing in the right in the right area for the Bank of Japan to possibly start to do something. They've just got a new governor in, and he's still talking about yield curve control and everything else. So doesn't seem like he's going to be doing anything specific really. But will the S&B move again? Don't know if they will. You know, trade balances are pretty good, and obviously with that GDP data coming in weak, will they be keener maybe just to sit on the sidelines? Inflation not as dangerous in the likes of Switzerland, not as concerning in the likes of Switzerland. So there may well be a pausing of rates after one hike. I mean, they only had one hike back in November, but they may well pause on that. I've just got a message from Sweet Ash. The right shoulder for the Nasdaq would be around 11,300. 200 DMA would be there. Right. Let's have a look at the Nasdaq again. Okay. Let me just make sure that we're on the same page, because mine's the Nasdaq futures. So I need this, I think. Oh, it'd be pretty close actually. Okay, let's just go with the futures, because it's going to be relatively close. Right shoulder. Well, the right shoulder. Let's see where this would be. So one thing we got to do is make sure when we're looking at this right shoulder, we try and pick a technical level that would meet. Now that we've got currently we got, that can't be right. Oh, we got last month's monthly pivot. That's okay. Okay, so let's have a look. Last month's monthly pivot's there. Let's see.
Clarence, I see you've got your hand up, mate. If you want to ask a question, just ask it. No problem. Put it in the chat. I'm not sure if you meant to press the hand up button, but I'm happy that you did. So we acknowledge that you are here, most definitely. And if you want to ask a question, you can come on camera if you want, but just put it in the chat box for now, and we'll sort you out.
There's a level here. There's a level right across here, so you can see that there's a little kind of inside-ish level, and you can see that if you extrapolate, sorry, if you extrapolate that to the right, it runs into this area here. So we can probably just shift it down a little bit and get a bit more accurate there. Now that looks like the sweet spot. I've got 11,700 sweet for mine. 11,300 would be, yeah, let me just, let's just put that in as well. I suppose we could be looking at, yeah, it could be down there, couldn't it? I think we've got a band here. We've got a range here. I think we've got a range between this point. So it's going to be where we see reversal patterns happen. So it's anything from 11,700 down to around about 11,300. I'd go with you on that. Yeah, I think that's totally fair.
I'm pretty much in the middle of both of you. I'm about 11,550.
Yeah, well, that would put it in this band, wouldn't it? I mean, it is this rate. It is within this. It was within this area. That's the higher end of the area. Swee's at the lower end, and you're in the middle. So yeah, so it's somewhere in this zone, I suspect, and it's going to be difficult to say exactly where it is because of the amount of support that we do have. We have support here. We've got support here. Yes, there's support here as well. There's probably a bit of support going along here. So there's a few areas that it could start to turn around and still be valid. Fed aren't out until, what is it, the 26th or the 27th of this month? So we've got a couple of weeks really to see whether this can start to bottom out sometime in the next 3 weeks. And I think that's what we're probably looking at. You know, March doesn't tend to be a decent month for the Nasdaq, so there's every chance that we do sort of like mess around in this area, but it's got to get at least to the upper end before we should start considering that the inverted head and shoulders, and we might start to see some spikes and everything else in this area. But of course, we might just come straight through, and that's what I'm hoping for, because this makes it a lot easier down here to look to buy. But look at the Nasdaq monthly chart on February was bearish. High test bar. Let's have a look. February was bearish. You're absolutely right. Yeah, it was. Look at that. Now, what we've got to consider here is so yes, you're absolutely right. So this is bearish, and that would suggest downside. Now we've already got downside. So this bar, in a way, is already suggesting that what this bar is saying is, to me, what this bar says is we've got a higher probability of having a down month. Now that would suggest that we've already started, and it would suggest that over the next 3 weeks that we are going to be moving to the downside. It looks like it might well be. You look on the monthly, that area looks good. Yeah, I see what you're saying, Jeff, on that 500 level. So it does suggest that this month will be down. It doesn't tell us obviously how far it's going to go. So a bearish bar for sure. Or it's a suggestion of a bearish bar for sure, but we don't now know how deeply it's going to penetrate into this previous bar. If it ends up right at the lows, that suggests another further move to the downside. If it ends up around about 50%, then it's kind of a toss of a coin. And if it ends up in the higher end of this green bar, then it suggests that actually we might well start to see some upside. So this month's bar is going to be quite interesting. But yes, for now, certainly we should be looking at a downside. Formation of a head and shoulders. Yeah, it would be on the monthly. Let's have a look on the weekly. I think it might be a different pattern, only because this left shoulder looks a little bit too thin. That would have been the head and shoulders there, and there's been a break and retest. Whoops, there's been a break and retest sort of along there, isn't there? Really, this needs to get under this point again, doesn't it, to suggest that we're going to be moving down. I mean, there's a lot of things really sort of to look at here technically, and this is what makes the being a technician such a challenge, because there are support and resistance areas all over the place. And it does depend on, firstly, your time frame expectations, and secondly, whether you rely on trend lines, whether you rely on horizontal levels, whether you rely on pivots or EMAs. There's a lot. So your zone is cool.
Or if you believe in price action, I mean, if you believe that has reversed, then every reversal bar that you see off a rally is probably where you need to be focusing. And you've so far seen two of those in phase 3, and we're now in 1, 2, 3. You're now about to enter phase 4, but I don't know that phase 4 can actually go beyond that range, the bottom of that range.
Well, here.
I think we're stuck in that range for quite some time, frankly. But to trade it to the bottom of that range makes perfect sense.
Yeah, for sure, mate. For sure. I mean, it doesn't look like it's coming back at this stage. I suspect the CPI data from the Eurozone today won't help things out at all.
What's this? Is this still Nasdaq? Is it? Yeah. Okay.
Yeah, this is the Nasdaq. Yeah, and we are seeing some interestingly, what we've got from the Fed and from the ECB suggests that stocks are going to find it difficult in these particular regions. And you look at the CAC it's right on the highs, and you can see this is a monthly chart. So already we're starting to see, look at that gap. We're starting to see some genuine negativity from the European stocks. But you look at the FTSE, not that bad. I mean, it's okay. It's starting to show some negativity, but but Governor Bailey has. If you look at this on an intraday basis, it hasn't really sort of like gone anywhere yet. It does look like it could well break down. This is probably the only one left actually for an opportunity to try and grab onto the short, because it hasn't gone so far. But with Bailey suggesting what he's suggesting, that the FTSE is outperforming at this current stage. When we look at
absolutely blew me away. When was it? A few weeks ago, when it was all-time highs in this environment. To me, that's amazing.
Yeah, all-time highs, and as I say, if you look at this, it's doing okay. You know, we haven't. Okay, we got something that looks like a bit of a negative kind of feel to that bullish bar, but it's still green. It's not like the Nasdaq. You know, the Nasdaq was red, and closed right at the lows. This is closed somewhere in the middle. So there's still a question. It's going to be difficult for the FTSE 100 to hold on if everything else is starting to weaken. But still it's outperforming. So, you know, there's a potential hedge trade there where, a spread trade there where you could buy the FTSE and sell the CAC on or the DAX. So the central bankers are kind of having a different, are giving us a different tone for a lot of these markets. So we got the FTSE, which is doing okay. No question. I think that this monthly pivot looks like it's on, doesn't it? It looks like that's going to get seen.
Yeah, sure does.
And then you start to look at things like that are affecting these markets. The WTI still pushing to the upside. We got was it Chevron or ExxonMobil? Suggesting that there is they're very very tight in capacity. Suggests that the oil could still push to the upside here. We've got copper, which is also in a bit of a fix as well, just starting to weaken at these particular levels here, right along. Well, didn't quite hit the trend line, but it's starting to weaken as well. Copper's coming down, but an interesting one, copper, because you got the Chinese economy suggesting that they're doing okay, and then there's a chance that copper could just come down and turn around and just whack straight back to the upside again. So that one's a tricky one. Gold took a pretty good move. Saw a pretty good move a couple of days ago.
It did, and on Monday we had a person in the room who absolutely fluked this. Said 1806, 1806 buy it. No, he didn't fluke it. He's very good at picking those levels. Lewis did very well. He said 1806 is your level. Where'd it get to? 1804.75 or something, wasn't it?
Yeah. Mine's 1810 on the futures, so yeah, it will be around there, wouldn't it?
Yeah, I think it's about 1805 because I had an order short underneath the first pullback bar, and it didn't get triggered, and I couldn't work out why it didn't get triggered. I mean, maybe the gold gods were looking after me there.
Yeah,
I didn't get triggered into the trade.
Lewis is good, isn't he? Lewis is good on gold.
Legend.
Might be the new gold expert, but yeah, it did come right to this point of support here. Started to push to the upside. It's a difficult one with gold because very very good bar, this one, really really good solid bar. A couple of bars actually which suggested, but then I suppose we had the same thing here and it didn't really go anywhere. And if you think of the Nasdaq, the reverse could still happen with the Nasdaq. This suggests buying, but it doesn't always happen. This suggests buying. It did happen, didn't go that high, and now we're starting to ease back down again. My problem with gold is the Fed, and also the seasonal bias suggest a grinding lower with gold. So I don't know. I mean, I like gold over the longer term, but have we hit the definite price that we should be looking to buy yet? Don't know. Is this going to go actually very, very much lower? You look at this monthly chart, and it could. I mean, this monthly bar doesn't look particularly attractive. If you're thinking about buying this, it's not looking great, is it? It's looking like we could well start to push further to the downside.
Fantastic to me.
You like the look of that? That's why you're selling over there,
I
right?
said as much a couple of weeks ago. I said if that's not a double top and a lower high, then I'm not here. But it was on a weekly chart, I think.
Right. Yeah. Yeah. So there's lots of things, mate. There's lots of things to consider. There's a few kind of permutations, I suppose, but things look negative. I think if you were sort of like taking the big picture stuff right now, things are negative. You got CPI data which suggests that the disinflation has paused at best. We've got central banks in the ECB and the Fed both saying, you know what, we ain't going anywhere. Yes, you've got the likes of the RBA suggesting maybe something different. You've got the Bank of England suggesting something different. Difficult to know what the S&B is going to do. Difficult to know what the BOJ is going to do. Can they continue to hold firm? to this point, they've held firm a lot longer than I think a lot of people anticipated. So,
I think if we're prepared to listen to the narrative, and I think this is very important, frankly, if we're prepared to listen to the narrative, and they are different, then that gives us an excellent edge in which direction to trade that particular currency versus the other one.
It absolutely does, mate. And you know, but this is the challenge: is that the you know, to start any bull run, there has to be speculation that there's going to be a bull run. So there's, you know, the bull run doesn't happen because the data changes. The bull run happens because speculation that we are at the point where data is going to change, and that's the challenge with the yen. I think many people have been sort of sat there with the yen. Many investors are saying they can't possibly hold firm and continue to hold firm. They've got to move with everybody else, and they've been burned. You know, anybody that's suggesting that has been burned because they just haven't shifted to this point. I should say they've been burned to this point. But things can change, you know, and I think that's why the positions that people are going to start to try and take are going to be on those currencies that are weak, because you know, if you consider the Aussie dollar as an example. The Aussie has, you know, obviously sort of like moved pretty negatively as well. Actually, a very, very similar looking bar on the monthly on the Aussie as on gold. But you know, we are near,
and that's no coincidence, of course. They're very much aligned, and generally you'll find the Aussies is a little bit of a lag on gold. So it's pretty good philosophy or theme or thesis. If gold moves in a direction and the Aussie hasn't at this point, then what's the Aussie? Because it generally will follow gold, but it lags a little bit.
Yeah,
it doesn't appear to be at the moment, but
yeah, but yeah,
lagging. I mean, it's following it, but it's not lagging.
Yes, it is. Yeah. So what we've got now though is the Aussie as a point of support. Is this the point of support? We don't know, but it is at a point of support. We've got a lovely inverted head and shoulders here, actually.
Gorgeous, isn't it?
And we've got a situation where the Australian economy is actually okay. I mean, it's not any better or any worse than anywhere else. Really, well, it's probably better than a few, but it's not too much worse than anywhere else. And the RBA are kind of suggesting something similar to the Bank of England, I suppose, which is why we've seen the Aussie lower. But all it's going to take is for the Fed to then say the same thing, and the Aussie's going to fly. And I guess this is the point. Speculators are trying to get in front of that announcement. You know, they can't wait for the data that's going to push it. Well, there is data that will suggest that, and it's going to be the surveys and things like that. You know, the things that suggest what's going to happen to the coincident indicators in 3 months' time. So the Fed, I suppose my point is, the Fed can't stay where they are if everybody else changes, or it's unlikely that they will, because they're just going to choke their economy to the point where they're just not competitive anymore. And that's what he's trying to get out in front of.
Sorry, I hate to interrupt you, but can you put a trend line from, you were very close to it, that little reversal, but that one, yeah. You know where I'm going.
Yeah.
Let's poke through it. Okay, that's interesting.
Yeah, let's have a look in a bit closer, just on the dailies. Yeah, it has, mate. Just has poked through it, right underneath it.
But it's come back above it. That's interesting. Now, actually, the daily's a different trend line. If you could start where the second test is there. Yeah, if you can start it there, yeah, and drag it through the next low, the next high. Yeah, that one. Now it looks a bit different to me. Wow. Okay, that's a buy. That's the daily chart, right?
This is the daily, yeah.
Okay, so you know what I'll do in the morning if that looks like that. I'll be buying the Aussie.
Well, let's make sure this level's right. I mean, it might well be there.
That's perfect.
Yeah, look at that. Yeah, that does look good, doesn't it?
Yep, good for me.
Yeah, Aussie looks good. What's that, sorry?
Setup wise, that looks really good.
Yeah, it does look decent. I mean, it's going to be obviously probably dependent more so on on the dollar. What we got? Let's just see what we got today. So ISM yesterday, terrible numbers, mate. ISM manufacturing yesterday, 47.7 from 47.4. So I suppose a little bit of growth. Prices, this was the big problem. Manufacturing prices, 51.3 from 44.5. So disinflation is not happening in that particular number. The unemployment, manufacturing employment 49.1 from 50.6. So slight sort of improvement for the Fed in the picture of employment there. But generally across the board, manufacturing PMI is 52. Oh, sorry, that was the CAD. Manufacturing PMI is 47.3 from 46.9. So slight growth, but missing expectation. Construction spending, that's not going to be sort of something. So we got a few numbers there which suggest that that there's problems, big problems ahead, and that does actually suggest that gold should do pretty well. Building approvals out of Australia overnight, negative 27.6 from 15.3%. So in a way, that is a survey which is basically suggesting that the home builders aren't applying for homes. Not particularly good reading for the economy. Private home approvals, negative 13.8 from negative 2. So again, not a good number there. Today we've got initial jobless claims from the United States. So that is another metric that people are going to be looking at. We've got ECB obviously out at 10 o'clock, so in around about an hour's time, now and a quarter. But the jobless claims at 1:30 UK time from the United States is another driver. So there's a few things today that could change things around. Services PMI from Australia later tonight, and then we got Tokyo CPI data today, mate. So that could actually affect your Swiss trade.
It could. What do you think about the Aussie numbers on Tuesday, which were CPI year on year, right?
Let's have a look.
Which was a 1% drop.
Aussie
and the GDP numbers, on Tuesday. That number to me, well, that is disinflationary, but the GDP figure, which of course one goes with the other. When you've got inflation, the GDP is going to be up shit. SH1T, sorry.
Yeah.
And they're kind of contradicting, to me, to my mind, they're contradicting those numbers. So GDP's fallen by 0.5%, quarter on quarter.
I can't find those.
Tuesday, February 28th. Yeah. Tuesday. CPI year on year.
Oh, CPI. Sorry, mate. I've got AIG. Is that before the AIG number?
I've only got
is that before retail sales or?
Hang on, am I in 2023? Yes, I am. So you can't find it. Really?
I've got no CPI. What time? What time was it released?
7:30 p.m. Singapore, I think. Hang on a sec. I'll update that. Whatever time that is for you.
7:30.
Sorry, 11:30 a.m. Singapore.
11:30 a.m. Singapore. Let me just see what time that is UK.
No, hang on. What time zone? Sorry, I'm in Aussie time zone. So GMT plus 10 is 11:30. So it's 1:30 in the morning, right?
1:30 in the morning, my time.
Your time, yeah.
Now I've got current account, housing credit, net import, retail sales from Australia, right?
On the 1st of March, Wednesday, the 1st of March.
Oh, sorry, because you said the 28th.
Well, I did, but I then changed my times.
I was looking in the wrong place, but I can find it now. And you give me the right day.
Sorry, mate.
Oh gosh. Yeah, quote unquote. So that GDP. Yes, it is disinflationary. You're right. 7.4% is still very high, isn't it? But
you know the one thing I don't believe out of those figures, if that's a year-on-year number, I do not believe that the CPI in Australia was 8.4% 1 year ago. I don't believe that for 1 second.
No, I mean
I
that.
think that's a heap of BS.
Well, I think what's interesting about that number is, yes, it is a slight dip, but that 8.4% was the high of the run, maybe an all-time high, I don't know, but it's the high of the run. If you look the other side of that, the previous month in November was 7.3%. So the 7.4 is still above that number. And we've got a kind of cluster of sort of 7%. You know, we're sort of like sticking around about the 7% that we've seen since October last year. So I don't know, mate. I don't know whether that is disinflationary enough to kind of suggest that that there will be, you know, nothing from the RBA. That suggests they've got work to do. GDP data quarter on quarter. Yeah, sorry, mate, go on.
I guess it doesn't really matter what that number is that 12 months ago. It doesn't really matter. To me, it does, because I think it's BS. But anyway, the fact that the CPI figure has gone down, so therefore disinflationary.
Yeah.
To my mind, that is not a bad thing anymore. Once it gets the CPI number right, if it's down around 1 or 2 or something like that, and it increases by 0.5%, then that's great for the currency. I get that. But when we're up here at 8s and 8.5s, surely we're looking for smaller numbers, not bigger numbers. Surely, because we don't want 8% inflation. I mean, that's not a good thing. So, to my mind, the way this and other calendars, if you like, read these numbers, and saying that 7.4, which is a 1% decrease in the CPI, is bad for the currency, doesn't make sense to me. So that's why I want to ask you that question. Please explain.
So explain why the decrease would have made the Aussie come down.
Yes.
I don't know whether,
like I said, if it was 3% coming to 2, then I get it. But if it's 8.4 coming to 7.4, I don't get it.
Yes. So I don't know.
You know where I'm at, right?
Yeah, I do know what you're saying, mate. Do you know the interesting thing is, if you've got a calendar open, your calendar open before that, then what you'll notice is that there was a speech just before that. Governor Jones was speaking, and I think what's really happening in Australia is that their narrative, the tone of the central bankers aren't as hawkish as others. You know, they're just a little bit more dovish. In comparison,
they're saying maybe December we're getting a rate decrease.
Right. I mean, is that kind of, so the Fed aren't talking about decreases. You know, if you compare the two, you think about the Eurozone, it's not talking about a decrease. And so I think if you look at the Aussie, interestingly, it was across the board, wasn't it? But the other thing about the Aussie is that with a recessionary sort of like picture kind of clouding the globe, we've got the Aussie is always going to sort of like find issues, particularly with China. And this is why yesterday's news from China was so significant. Look at what it did to the Australian dollar. You know, China kind of comes out with no, have I got China on here? No, I don't. Let me just put China on it. But China comes out with PMI data, which was outstanding. It wasn't just okay. It was just there were amazing numbers. And all of a sudden, the Aussie starts to pick up again. So I suppose when you sort of have to, when you look at a number, it's not enough to kind of get an overall picture. You have to kind of weave everything in there. And you're right, a little bit of a dip in that number wouldn't have suggested a big move lower, except for it is 1% lower. You know, 8.4% down to 7.4%. That's 1% lower than the previous month. You've already got this kind of dovish-esque narrative. You've got so far a world, you know, before the China numbers, you've got a world that's talking about recession. You've got actually quite a lot of evidence that that's happening as well. There are other numbers before that which from Australia that weren't very good, and I guess that when you sort of like start to look at all that sort of stuff, then you start to go, okay, fine, I can see why the Aussie would be weakening a little bit. The only kind of head scratcher.
This is why I'm not an economist, and it's why I don't understand fundamentals really, because to my mind, if the inflation rate's coming down,
yeah,
right, that means people are then prepared or able, one or the other, and maybe a combination of the both, to actually go out and spend, and therefore the GDP should increase. And like I said before, the GDP dropping 0.5% on that figure, or at the same time, to me is just nonsensical. It doesn't make any sense to me at all.
Yeah, but what you're looking at is GDP. Are you talking about GDP year on year, or are you talking about GDP quarter on quarter?
Well, unfortunately, yes, they don't line up. One's quarter on quarter and one's year on year, so it makes it very difficult to line that up. Absolutely, and I get that.
Yeah. So the CPI data really sort of, if you're looking year on year, it has come down, and we've also seen GDP year on year come down as well. It's starting to move lower. But
to my mind, if you actually analyse that and go, okay, one's going to drive the other, then my read on that would be that GDP is going to pick up. Maybe not in the next quarter, but certainly in the next half.
Yeah.
So I'm thinking that doesn't hurt the Aussie dollar at all.
Yeah, I totally agree with you, mate. And actually, I think you do understand the fundamental picture. I think that the difficult thing about the fundamental picture is that you don't know when the numbers that are being read are going to permeate through to the charts. And this is the difficulty. If you sort of take a number that gets released and then take a trade, then you're in and out of it within half an hour, which is a really good way to approach the market. But if you're sort of trying to build a longer term picture, then inevitably it takes longer for the numbers to start to filter through, to the other side. But I'm in complete agreement with you, mate. I think over the medium to long term, the Aussie's probably going to outperform. It's probably going to do quite well. Because the numbers are weak, but they're nowhere near as weak as other places. So the GDP number is still quarter on quarter at 0.5%. If you compare that, let's say, to what happened with Switzerland's at 0. So there's no growth there. GDP out of Australia at least is seeing a 0.5% growth quarter on quarter. And also you have to take into account seasonal, adjustment and all that kind of thing. We don't know when does it tend to do its best work. Then you look at the chart and you sort of, then you hear about the Chinese manufacturing. Here we go. I've got it here. Non-manufacturing PMIs 56.3 from 54. K-share manufacturing 51 from 49.2. So from negative to growth. Manufacturing PMIs 52.6, sorry, from 50, and composite PMIs 56.4 from 52.9. So
yeah, so the numbers are reflecting that they're coming out of lockdown, right?
Exactly, yeah, and that would suggest that's good for the Aussie, because the question has been, as you quite rightly say, you come out of lockdown, does the Chinese economy pick up? Well, the evidence suggests right now that we do. And what we saw after COVID was a COVID bounce. Are we going to get something similar now with China and subsequently the Aussie dollar, like a COVID bounce out of that? Well, this chart looks pretty good, doesn't it? To suggest that
I like it. That looks really good to me.
We've got something to go on at this particular point. Now, this is the Aussie dollar, and it's not necessarily the best one of all. Let's have a look at some others. I mean, I think that the Aussie dollars may well be the best in some respects. Aussie CAD, another one of some interest. I mean, Canada has also sort of had some numbers this week. So they got GDP quarter on quarter at 0. So there's no growth in Canada from the last quarter. Similar, I suppose, year on year data as well. And yet we've seen this big move down with the Aussie CAD. Probably not yet at exactly the area we'd want to buy it up. So it might be a little bit early. But then maybe we've had it, actually. Maybe this is it. This would be the area you'd be looking to buy. A few days ago, we had that. A few days ago, we had this. Then we've had the push to the upside. Can we also find something here? Probably. If we hone in here. I mean, that looks pretty good, mate. I know there are going to be longer term trend traders.
Yeah, well, that's not me. So I had a nice little trade on Aussie CAD that I'm now out of because of the retracement. I'd probably trailed my stop a little bit too tight, but I'm still of the opinion. Oh, that chart's not telling me that though, is it? The chart's telling me we're in a buy zone. Yeah, okay, I get it.
Yeah, I mean, it looks pretty good. I mean, you know, I think if we look across the board, we might well be able to make a pretty good case for the Aussie right now. Let's look at this on the dailies as well. What's happening to the Aussie Swiss? I mean, longer term, you change this to a weekly. No, it's not clean actually, but it looks like a inverted head and shoulders kind of look about it.
David, I'll show you all your questions, mate. We'll get there, promise.
Look at that. I mean, this is a 4 hour. Inverted head and shoulders on the 4 hour, poking through. This is the right shoulder. So I think that there's probably a few technical kind of patterns when we look at the Aussie that is shaping up pretty well. And you've got a driver because you've got China. You know, so if you take all of the numbers and compare the Aussie to every other country, you probably end up somewhere in the middle. Maybe slightly to the upper end, you know, against many other countries. Then you put China in the mix, and all of a sudden it pops. So, so the Aussie, I think you can make a case for quite a few currency pairs against the Aussie.
I think you can, absolutely. Okay, we've got David, who's a wonderful contributor when he comes in on a Thursday. Unfortunately, he can't be in on a Monday. Can you see his questions, mate?
Is it in YouTube?
Yep.
Oh, let me have a look.
Okay, it doesn't matter if you can't. I'll start to read them. David. Ivan Ivo, yo number. Not sure what that means, but I can't answer the question if that's a question. David's been day trading amazingly on the 5 minute this week. Well, hats off to you, David. I'm unable to do that. I have a hole in my. Oh, I thought you were going to have a hole in my head. Hole in my game, very good at fading highs and lows, but I'm very bad at following breakouts. You and me both, mate. Or following breakouts, or just picking breakouts. Following breakouts, I don't have a problem with following breakouts as long as we get a retest of the level they're broken from. That's my thing. Like I frame everything around previous days, high and low. Okay. That's not my methodology. I like to see the retest, as I said, regardless of what the high and low of the previous day was. If I'm bullish, I buy below the previous day's low. Wow, that's brave. That's brave. But if it works, it works.
Well, I would have thought it's quite sensible as well, isn't it? I mean, that means you're getting a great price.
It does, but it also means if you're wrong, you're going to be wrong fairly quickly. But when it breaks out the previous day's high and I try to buy it 60 to 80% of the time, it comes back, which is my point, I guess.
Yeah, interesting, David. Do you know?
So I'm good at buying low relative to the day of the week or week, but very bad at buying high for continuation.
So it suggests he's a range trader.
Yeah.
Which is great.
Exactly. Do you realise that's what you're doing, David? Do you realise you're actually trading a range rather than trying to extend the breakout? And if so, there's pretty easy methodology to correct if you're having problems there, in my opinion anyway. And it's very, very simple. You're obviously getting the bottom of the range, yet failing to get out of that. Is that what I'm reading? Second phase breakout? Is that what I'm reading?
I think so. I've been bearish for 4 weeks on
pound dollar.
Oh yeah. I'm being able to trade any breakouts. I've just been selling previous highs. Cool. Hi, Emmanuel. Sorry. Which pair are we analyzing? Oh, this is the Aussie Swiss currently on the 4 hour. Yeah, so I think what David's saying is, so I'm guessing this is what we're looking at here. Hold on. I'll get rid of this. So if it was the previous day, then this was yesterday. So I'm presuming you're going to look to sell at the high here and take profit somewhere along there. So I'm, if we say this is yesterday, we'll see it on the pivots actually anyway. So this is yesterday. There's the high. So you're looking to sell up here, and I guess buy down here. Is that right? That's the way I'm understanding it. So looking at.
Sorry, go again, mate. I was distracted.
Oh, but this is yesterday's range. So there's the low, there's the high. So looking to sell here and buy down here. I presume
that's not how I read it.
Oh, okay.
Trading highs, but very bad at following breakouts. Like I frame everything around previous days high and low. If I'm bullish, I buy below the previous day's low. So
that'd be here.
Yeah.
Buy here.
So yeah.
Sell here.
So if it's a daily range,
yeah,
he's buying at the low of the range of the previous day.
Yeah.
That's how I understand that.
Yeah.
And to me, that's brave because price is going in exactly the opposite direction to what you want to trade. And I actually like that.
Yeah.
Because it's counterintuitive.
Yeah. Yeah, it does make sense. And I guess that the key is that if you are a range trader, yeah, well, we're putting the stop is one of the things, I suppose. Maybe below the previous day. I don't know. That's where sensibly that's where it would most likely go for me. That one would probably be up here. If you're selling up here, probably a stop up at this point here. That seems to make sense. When it comes down to the breakout thing, I just wouldn't bother. If you are a range trader, just be a range trader. I don't think you need to worry about the breakouts.
Yeah, 100%.
And also, you will find that certain times of year will be good for you. So I would have thought this current environment is probably quite good. As central banks rebalance their expectations and their policy, then ranges are much more likely to take place. So the range traders should do really well. Yeah. That seems to be what you're doing, David. And actually, all you need to do is recognize when things change. So when things begin into trend again, the range strategy isn't going to do very well, and you could get run over. Yeah, well, that's fine. That's fine because, but as Jeff always says, a trend is the next road to a range, and the markets do range 2/3 of the time. That's a statistic that's been in the trading kind of world for time. It's always, people always say that, but you've got to recognize.
So in other words, trading breakouts is a mug's game. That's really what we're saying at the end of the day. And guess what I'm trading at the moment on CAD Swiss? I'm trading a breakout. Yeah, there you go. Because sometimes I'm just done.
I think trading a breakout at certain times is a mug's game, but sometimes it's going to work because sometimes you will get that kind of that imbalance in policy, and when you get the imbalance of policy, it's reflected in the charts. But right now we've got probably more. Things get priced in. When they get priced in, as long as things stay within that balance, then you're going to get ranges. If they don't, an expectation changes.
Sorry, you go.
I was just going to say, when expectation changes, then you're going to get the trend. But right now, I think we are in a situation where there is that little bit more balance kind of coming back into play, and I particularly think that in the next year or two, David, your strategy will probably be brilliant, because things will eventually properly settle down. They're still a little bit volatile, but volatility will be your enemy. And the best thing to do, if I were you, is look at this. This is quite cool. I discovered this the other day, and I think for range traders, trend traders, this is a really good tool. So, right, you look at this. This is investing.com. Brilliant, brilliant website, but best website I think I've ever found about investing, just because they give you all the calendars. But look at this. There's a little bar here which says currency volatility. And you can work out currency volatility, but I can tell you the equation is really it's quite laborious to kind of do currency volatility. But look what this tells you. You can go to look, what were we looking at there? We were looking at the Aussie Swissy, and you come in here. This tells you the daily volatility in pips. What do you tend to be looking at? And over the most recent sort of week, this is what we've had. So volatility is kind of down. You can see here which is the most volatile and which is the least volatile. And I suspect you probably want to be looking at the least volatile for range trading. Euro CAD looks pretty good. You want it in percentages, by the way, not pips, because they won't reflect anything. But you look down here and it will tell you it will drive you towards the ones that are more likely to stay into range. And you can see a bit of a pickup here in the Aussie Swiss on the hourly. It's really cool. Tells you what it is, the importance of volatility, all that sort of stuff. So that I would recommend. And I will. Oh, I can't put. I was going to say I'll put it in the box, but you're not in the Zoom. But that I would recommend.
Well, investing.com, not hard.
Yeah, investing.com, and just have a look at the volatility tool. We better push off anyway, mate. It's gone.
It's about that time, isn't it?
Yeah. No, I've got. We've got a school strike day over here today, so I am on.
Oh, you got Molly.
I've got entertainment duties, so I'm going to go and entertain.
Okay.
And
I want to leave you with one thing then, and that's all. You've got the chart, haven't you? Hang on, I'll just share that if I can find the bloody control room. And again, Paul B. Sorry, I sang again. He's going to get another dirty one. I can't find the control button.
Just for context, so everybody knows, we get banned if Jeff sings. we get banned by Sony or something like that for
because it's so close to the original, right?
Oh, it's so ridiculous. Yeah,
they think I'm breaking copyright.
Yeah.
Okay, this is about euro dollar, and this is one of my things, right? I love euro dollar because it's so, in my mind, accurate in terms of technicals. And there's two things going on at the moment with euro dollar. One is exactly what I'm showing on the daily chart, which is a manifestation, if you like, of a false break of a support level. It doesn't come with a massive confluence. Sadly, if I put a horizontal level across there, that's about as good as it gets, because there's been resistance here, support here, resistance here. There's been a whole mess of things here. A little bit of support there, but not much. So if you zoom in again, what we're looking for is confluence in that area. That line is what I've just shown you. So I guess to a short-term degree on a daily chart, if this were to be as it is, I've got to get rid of these because they're going to be completely confusing. I don't know where that belongs, probably on a 4-hour chart, maybe. So let's get rid of that. That's the same. 4-hour chart only, get rid of the daily. Okay, that's cleaned it up a bit. That should make it a little bit more identifiable, if you like, for what I'm looking at. So if this candle were to close tomorrow, exactly as it is right now, I would trade it long, but only to here before I took some profit. Put my stop loss underneath that horizontal level, which is around about, let's say, at this very moment in time, 54 pips, and I can trade it up to about 40. So that's not such a bad thing from a reward to risk point of view. And if it does go on with the job, and David, this is to your point, if you're thinking about where you get into a breakout trade, it's actually not at the breakout level, right? And I'll give you a case in point because I'm trading it at the moment. This is not the area to go long, right? Because we're at resistance. You don't want to go long here because you're trading a breakout. But guess what I'm doing? I'm doing exactly that. It's against my whole principle of trading, but I've got a few reasons other than that. Here's where you want to trade the breakout long. Here, down here somewhere at a support level. And that's where, in your case, I think you've got a very good opportunity, because if you're picking the bottom of a buy bar as your entry for a long, wow, you're getting, as Ash said before, a super price. And if this actually breaks out as you are wanting it to do, you've got the best thing available to you. I don't know how you're going to work out why you want to go long. That's another story. But I want to go long here because I've got the triple bottom. I'm at, what is this? CAD Swiss, right? I'm at all-time lows. It's only been this low 1, 2, 3, 4, 5 in history, right? So when that happens, the one thing I want to do is not trade short. The other thing I want to do is trade long. So that in mind, where's the best place to trade long? Where's the best trade place to get a breakout from? It's at support, not at resistance. And I'm doing exactly that, as I said, on CAD Swiss at the moment, because I've got this firm belief that it's going to break out. And I've been trying and trying and trying, and I have traded it from down here, and I've got out of the position, or never got in the position, but et cetera, et cetera, et cetera. Let's go back to my point, which is where the euro and versus the dollar comes in. This is not a breakout trade. This is a break-in trade, as I call them. So we're breaking back in to what is the previous range, which is in here, right? So this is a false break of support. And if this candle looks like this tomorrow, because it is a seller bar, and this is on your thesis as well, because we're going against momentum, I'm going to trade it here, where if momentum comes back into play, so this bar means anything and this bar means anything, we're going to here. And that's where I'd take profit. So that's euro dollar. Then I'm going to switch positions. Why? Because here's what I wanted to show you in the first place. The euro versus the dollar has come to a point, and we know all about this going to parity and beyond parity and all the rest of it. And since that has happened, that massive sell-off from COVID, it coincided pretty much with COVID. We topped out at March 20, and we had a bit of a dip, but then we've just sold off ever since, euro versus the dollar. And now we're broken clear of that support, and a horizontal support and parity and everything you can name. Everything, every bit of support you can throw at euro dollar, it's been broken. Now it's been retested in a massive and very, very swift V-shaped recovery. Then on the monthly chart, last month, we had this massive rejection of that level, which it couldn't be clearer, right? It's just super clear that we don't want to go above that trend line at the moment. And now we're getting a retest of that, not so much the trend line, but certainly this horizontal level here and a closer trend line, which is this one. So my point being, if this actually closes as it is now, a bullish candle on the weekly chart, there's nothing will stop me from putting an entry below that on Monday morning, barring gaps in the market, and looking for price to come back and test these lows, but certainly this area here. And that goes to the point that I was saying before. If you want to trade short, you trade that off resistance, which is exactly what we're trying to do here, right? This is a super resistance level. You've seen a better super resistance level on the monthly chart here, where it rejected that out of it, just said, no, we're going this way. Weekly chart, given me the false break of the, let's call it intermediate trend line, because it's on a weekly chart, broke it, consolidated, rejected, came back underneath, gave us a doji, which made it very, very difficult to trade. But had you traded that, you got the very best price that I believe you could have got, apart from trading up here, of course, trusting that reversal bar. And we're seeing it again on the daily chart. We're seeing exactly what I want to see. I want to buy this up to here, and then I want to start selling it, because on the bigger time frame, we're seeing the reversal of what we're seeing on the daily. Longer the stronger, absolutely. Get short under here, I reckon. We'll see how the weekends.
Cool, mate.
That's my analysis on euro versus the dollar on the 30-minute chart. Of course, we're always looking for a daily pivot test, and that has, I believe, been done. We've had a break and retest. Looks to be short opportunity again down to here. So we'll see.
Nice.
There you go.
Okay, mate. Well, we better push off, because I am getting tight for time. And
oh yeah, sorry, mate.
That's okay. No, it's
Taking
all
you away
good.
from your door.
I mean, we did need this, and maybe we'll come back in Thursday. Because David's put in about. I get what he's doing now. So he's looking for the low and then looking for a turnaround on the 5-minute chart. So like a higher low, and then buying.
Ah, nice.
Yeah.
Nice. Now you're talking my language, yeah.
Yeah. So let's look at that next week, because I can't go into it just yet, right now. But David, if you're in next week, let's look into that in a bit more detail. And maybe try and get in. If you can get in early, that'd be great, because then we can sort of spend a bit longer on it. But I better go, mate. So I'm going to bid you all farewell and a wonderful, happy weekend. We'll be back Monday as always with George and the rest of the crew.
You bet. Dreadlocks on. It'll be okay, mate. Have a great weekend. Have a good day with Molly. And we'll look forward to catching up with all our trading buddies next week. Thank you, David, for all those questions. Thank you all for being our trading buddies throughout. Monday and Thursday. Defo will be next. Excellent, David. Good on you. Have a great weekend. Bye-bye for now. See you guys.